Welcome to the Upshot for August the 16th. I'm Nadine Blaney. Well, at the big end of town, we've heard from BHP, Goodman Group, Challenger, James Hardie, and Seek. We'll take a look at the companies, all with positive share price reactions, though, in today's top three. Let's start with BHP and its 26% rise in annual profit, hitting just over $21 billion compared to just shy of $17 billion last year. The results were helped by strong WA iron ore sales and commodity prices. It's declared a final dividend of $1.75, shaving 25 cents off last year's record $2. Meantime, Life 360 is upgrading guidance for subscription revenue growth and narrowed the range for revenue and adjusted earnings to a second half loss to between $3 and $6 million. Net subscribers in the second quarter were up to 111,000, the second highest ever quarter, with monthly revenue up 65%. It now expects to be consistently positive with earnings and operating cash flow by late calendar 2023. Its CEO Chris Hulls calls it a value growth tech company.
If you look at many of the companies that led the sell-off in tech, they were spending double their revenue to expenses. I think we're about maybe 20% over or something in that range. So it's very easy for us to turn a few knobs and make the company profitable. That is the underpinnings of our confidence that now that we've gone through this heavy investment period, it won't be that difficult for us because we were never one of the companies that had an upside down cost structure. Our margins have been high. The vast majority of our growth is organic. We're not overly reliant on marketing to grow. In fact, in the depths of COVID, we turned off all marketing and still grew MAU and revenue. So it's really up to us when we make that shift. I'm a very big believer in our vision. I think we have a ton of room to grow, which is why we do continue to make heavier investments. But I am very confident in the trajectory we're now on.
360 CEO Chris Hulls there. Now, online furniture retailer Temperate and Webster shares are soaring after it upgraded its earnings margin guidance for FY23 to between 3 and 5%. It says inventory levels heading into FY23 remain strong, with all metrics in line or better than internal targets. It's posted full-year revenue of $426 million, which is an increase of 31% year on year. Now, UBS says it was an earnings beat and a sales miss. It says that it will soon shift toward greater margin optimization. In UBS's view, revenue growth has always been the key focus as the company emphasized the market opportunity. So it says it's slightly surprising to see a deviation in that strategy to optimize margins in the near term, but in brackets saying it's probably prudent. And that's today's Upshot. Thanks for joining us.